All right. Good evening, everybody. It's Tuesday, 7:45 p.m., July 14th. Price of Bitcoin currently at 92.59. I was just explaining to a member that, I'm kind of glad at my puts and stuff. I didn't really hold on to, even though I know I could have made a profit on them if I had sold somewhere down here or over here. But I think the market kind of shook me out when the market pushed up to about 3200s or so, and then spiked down, moved sideways, spiked down again. Now it's back up. So you could see it's been incredibly violent as of late. You know, the volatility of this kind of movement, guys, this typically happens when the market itself is trying to figure itself out. Like there's just positive news coming out one day, negative news coming out the other. Bank earnings coming out negative, but then Moderna news spontaneously comes out today and says, hey, we may have a better quote unquote cure for coronavirus, or rather it's something that boosts your immune system. It's just been very wishy-washy. And I think the one thing that Faisal and I do best is we pay attention to the money flows. We pay attention to what the market is actually showing us. And I think you guys very well know that Faisal, myself, Austin, we've largely, cut down our long positions, guys. And, don't let other people fool you otherwise to think that just because the market is bullish, that there are not some things that are wrong under the hood, okay? People who make money consistently in markets do not take aggressive risks with their capital. You take aggressive risks with capital when the markets are bottoming, not when they're topping, okay? And so this is where you want to start trimming down your positions in terms of the long side. You want to start taking a little bit of risks off the table. You want to start taking profit. Same thing goes with the alt space. I've told you guys many times, just because there's a bunch of altcoins that are going up doesn't mean, first of all, it's an alt season, and it doesn't mean that you have to participate, okay? People might be making money here and there. I'm sure people on Twitter are posting their screenshots. I know everybody in the whole Link army is talking about Link going to $10 and stuff. Maybe, but I bet you sooner or later, a lot of them are going to give that back up to the market. It's just how it is, guys. You've seen the cycle over and over again, 2017, 2018, 2019. People just have goldfish memory, because they don't know how to hold on to their profits. This is why the market will inevitably lure a lot of people into these greedy trades, and it will flush them out of the market at the bottom, taking a lot of their profit and pretty much, their initial capital, okay? So the point is that when we're looking at the structure of this market as is, or even, Bitcoin, I've seen now so many people, whether it's, Twitter or Facebook or all these random analysts, start talking about the case for now why it's bullish versus bearish, just going back and forth. You guys know that I've largely been sitting short. First of all, I was even short back here. I unfortunately got stopped out with this thing right here. I mean, this was definitely a squeeze, but then I re-entered back in right here. So you guys know that we've been short literally a month and a half, right? Has our position changed at all? Has my analysis changed at all, right? So for the most part, nothing has changed. So the people going back and forth are not really looking at the analysis, because they're not looking at the broader picture. See, this is the broader picture that's at play. But people will continuously deny this because their vested interest is when Bitcoin does go up and their alts pump more or Bitcoin pumps more. So it is not in their best interest to watch Bitcoin go down. It's a very inconvenient truth for them that Bitcoin might inevitably head down from here. It's the same thing that I've been talking about, these descending triangles, right? I mean, Bitcoin loves these descending triangles. I don't know why. It just so happens to be that, when I look at this structure, I mean, this looks like a descending triangle to me. Same thing with this one in 2019, and same thing with this one in 2018. And guess what's common about all three? In all three, I've been calling that these were the tops. You can watch my YouTube videos over and over again, and you'll see that I've called this possibly breaking down to 2,500. I was wrong by $600. I said this one was probably going to break down to 5,500. I was wrong by about 1,400 bucks. But again, we broke that, you know, several months later, right? This one, I've been saying it over and over. First of all, from here, we're probably at least getting towards $7,900, $7,800, maybe 7,000 flat, because here's a couple different ways to look at 7,000, right? If you look at the base of this cloud right here, okay, look where it is, right? The bottom of this cloud is right around 7,075 or so. This bottom area right here, guys, price almost gravitates to it like a magnet. When the price starts breaking down, that's usually how it works. I don't know why. It's just, you know, the way the cloud is designed to show you the best key SR level in terms of a price that will, you know, be attract, or in terms of a magnet that will attract price. Okay. So this is how I'm looking at current price action. Nothing has changed. All right. So what you need to take away from this video, okay, and I wanted to keep this short and sweet, is that if myself, Faisal, and Austin, a hedge fund manager, currently a former Citigroup manager, is telling you that he is taking money off the table, he believes that the market will probably have a 15 to 20% correction at least, doesn't mean that we're going to crash. And by the way, a 15 to 20% correction in the S&P 500, guess where that takes us? Let's check that out, all right? From here, 15 to 20%. Let's just say 15%. That's about 2,700 points, okay? Remember, Bitcoin, when the S&P 500 drops, it drops almost twice as hard. Because remember, this big drop in the S&P 500, we had a 30-ish% drop. We had a 62 or 65% drop overall in Bitcoin from this key high. Let me see how much it dropped actually. From here to this 3,600 low, 65% drop. So something that I've noticed in Bitcoin compared to the S&P 500 is when the S&P 500 drops 1%, Bitcoin drops 1.75%, almost 2%. Okay, so if that's the case, right, from here, let's just say 10 to 15%, we should be coming down to 40%, let's just say. That's about $5,500. Okay, again, not exact figures, but just some levels to look forward to. All right. Let me see here. Link has been taking off again, but you know, guys, again, I cannot stress this enough. Please do not get greedy. Forget about the people who keep posting that, you know, they're making X% gains and whatever. And by the way, I respect everybody in our community who's kicking ass in these altcoins. They're doing a phenomenal job. But remember that if you're not actively trading in the market, and if you don't know when to take profit off the table, or you don't know when to properly take your losses and take your stops by accepting your losses, you will almost be doomed for failure to lose money. If you keep moving your stops and you don't have a game plan in place while you enter a position, you're going to be handing your money to the market over and over again. And so in these cases, it's best to just stay away because there's always better opportunities. The best opportunity that I've told you guys about for the last month and a half, like I said, is just being short. You didn't have to do shit. Like you could have just stayed short with me from $97, $9,800 all the way till now. Come back, you know, from vacation a month and a half later, and you'd be fine. You'd be in heavy profit, right? So these are the ways you need to figure out how to put in the least amount of effort in terms of positions, in terms of market structure, that is showing you obvious signs that there's either not demand, volume is lacking, sellers are strong, or buyers are strong, you know, whichever case you want to make a bias for, and then you need to stick with that. And then don't change your game plan unless you're provoked or forced to do so. Okay? Is that clear? Does anybody have any questions? And by the way, Link right here is kicking ass. Remember, I put down these 1.618 and 2.0 fibs, both hit, okay? If both these hit, you want to wait above this area right here for a candle close to then see if you can get to the 2.618 extension level. Let's turn that on. Let's see here. So that would be about $10.55. But again, if you buy now, you haven't quite had a breakout above its previous high. So you're kind of gambling there, right? I guess you have the momentum on your side, but do you want to gamble, with this being a potential top, especially after a parabolic run-up, right? You guys have seen parabolic run-ups and how they have acted in the past, especially in crypto. They kind of end pretty violently, right? Taking down a lot of the market with them. And here's the thing about crypto, especially Bitcoin, it does not give you good exits, okay? It will always trap you into thinking that you can keep going up, or you might get an opportunity to short properly, or you might get a pullback to long. No, Bitcoin and crypto more often than not takes no prisoners, okay? It's usually just straight kill shot. Like, you might see $1,000 candle down one day in Bitcoin, and alts might go down 20% overnight. That's just how it is. I don't know why. I mean, you can see historically, right? Look, over here, you see one day, okay, price drops, gives you maybe a day to short, drops about 3.5%, almost $375. And then what happens the next day? Price goes from this key high all the way to this low, almost a $1,700 drop, 18% drop in one day, right? Same thing going back into 2018, 2019. Okay, it drops right here, consolidates, drops 15%, consolidates for 3 or 4 days, and then again drops another 25, 26%. So these are the things that you want to pay attention to when it comes to market structure. Is we're coming to that inflection point. I know people keep wanting to redraw bullish patterns right here to make their narrative, but the fact of the matter is, guys, we've slowly just bled down. If you think about it, right? If we've hit this 9,000, 8,000 area so many times, where do you think the real buyers are? Do you think that they're just waiting for another $100 or $200 dip? Or do you just think that there's not interest here? Maybe their interest is maybe $1,000 lower, right? So you have to be able to read these things in the market and not just think that, well, if I draw the pattern this way and this way, it will create a more bullish pattern, right? I think the signs are visible. I told y'all before, if you look at the middle Bollinger Bands right here, okay, on Bitcoin, we've been hovering on the middle Bollinger Bands. And historically, whenever Bitcoin or any particular asset does that, more than likely it's going to start breaking down, okay? On top of that, I told y'all about GBTC, okay? GBTC, let me see here. Middle Bollinger Band, 34 EMA. You can do this back test on your own. Go back all the way into the last year or two and see how strong the middle Bollinger Band and this 34 EMA is for GBTC. Every time you start breaking down below them, there's a pretty decent sell-off. You can see that right here. You can see that right here. And you can see that right here, okay? Once you start breaking above that, right, after that big consolidation and a big drawdown in the market, once you start breaking above that, hey, you can go parabolic. But we're not at that stage. We just broke down under both of them, and we're struggling to get above that. And not only that, we're struggling to get above this double top low right here. See, this is the top, double top, the first low right there. What are we doing right here? Can't get above it. So we're kind of just meandering around this area, just struggling to find strength. More often than not, there's going to be one bad day where in the stock market, sellers are going to step up and they're going to torch GBTC. Where is that going to translate over into? Spot, Bitcoin spot. And Bitcoin is going to roll over, the spot is going to roll over into derivatives, right? It's a pretty obvious cycle to me, and maybe, maybe for me, it's hard to look at these markets when the structure is so clean and bearish that I can't look at it in a bullish way. Because for me, it's just so evident. And so you could tell me that I'm at fault because I'm not willing to look at it in a bullish manner. But tell me where the bullish signs are, and then we can, proceed with the conversation further. But if the evidence is clear based on, previous indicators that we've used, historical context that we use for, different indicators, well, then I'm not going to change my mind, right? It doesn't make any sense for me to dilly-dally and go back and forth with my bullish bearishness, etc. It just, for me, it's just much easier to just stay short and not worry about the noise of everyone else telling you that this is possibly bullish or we can possibly go up this much and that much, right? Just sit back, make your money, and then let people just, keep chiming in with their bullish thoughts. Let me see here. Any questions so far? Elizabeth said, Peter Brandt said he thought the structure was constructive now. Any thoughts on that? Sorry, he didn't explain why, but he's the band guy, so wanted to ask. Peter Brandt, let's see. I didn't see that, but let me see. The Bollinger guy. Oh, yeah. What's his name? Oh, John Bollinger. Yeah, I forgot his first name too. Let's see here. Starting to get constructive on BTC US dollar again. Oh, I think he meant constrictive. I don't think he meant constructive. Right? Because it makes sense that the Bollinger Bands are constricting price. I mean, again, I'm not trying to put words in his mouth, but constructive is not really a word that you could really use with Bollinger Bands right now. And he usually comments about Bollinger Bands whenever he does that. So yeah, they are, constricting price. It's tightening up a lot. And you guys know that the simple definition of how you utilize Bollinger Bands is to be able to understand how volatility is tightening up or blowing out of proportion when it does something like this. Like violent moves, up or down sometimes do these massive spreads in the Bollinger Bands. And so when you get tightening, well, you should be expecting volatility soon. Let me see here. Let's see. Steven, I think I already answered that. I don't know if there's anything going on in the FX markets, though, by the way, guys. I was talking to a member this morning. I think it was Travis. What I'm looking forward to is either seeing if we can bounce off the support right here or take out this key low from 10th of June. That might open up some opportunities for us, possibly in the FX space, and it also might give us an idea of how equities are reacting, okay? Here's the thing, all right? When it comes to the dollar, first of all, the FX markets are huge. I mean, they're significantly bigger than the equity markets and even the bond markets. Like the bond markets and equity markets are like little children compared to the FX world. When the FX world moves and when it starts, dictating things in real currency terms, there is some real shit going down, okay? And so when it means that the dollar is about to find support, well, you got to pay attention to how the equity markets are about to look. Because here's the thing. Here's an argument you could draw. Say the dollar hits the support and starts pushing back up, right? Equities, guess where equities are? Well, they're pretty much at the top. I mean, they're very overextended. You have seen Fassel's updates, right? He's told you, I've told you, Austin's told you that markets are showing you a bit of weakness. High growth tech is, I wouldn't say it's breaking down, but they're taking a breather, okay? Remember what has propelled this rally. It's the behemoths like Amazon, Apple, Tesla, Netflix, Disney, some, healthcare firms, but mostly high growth in tech. If these big names are starting to see big sellers step into the market and start selling, okay, well, the indices and mid caps and low caps, such as things like IWM, are going to start breaking down. And if those start breaking down, that's where you see the broad market, meaning a majority of the stocks in the market, also start to tumble. Because when high growth and tech starts breaking down, that means big money is actually selling and they're leaving the market. So what I'm trying to say is, say for example, the dollar finds support, okay, right here, and it starts pushing back up. Remember, dollar strength is equivalent to people going into dollar, or effectively maybe leaving bonds or equities, or you could think of it as saving, dollar or going into cash, right? So that means if the dollar finds support and equities are already extended, well, you could see, equities selling off, the dollar pushing higher. So the dollar will probably be the first one to signal to you that, wait a second, we're finding some support, we're pushing back up, and then equities might start selling off. Everything in markets, guys, is related in some way. Our job is to figure out on what day, what cycle, and how are they related, and how can we make the best decision to make ourselves money from their relationship, okay? And so the most obvious relationship for me has always been to look at bonds, to look at the dollar, and to look at equities. If bonds start breaking, especially the treasuries, that means there's some significant weakness in the equity markets in general. Here's an example of the 5-year yield. It has gotten just destroyed over the last, several months, okay? 10-year yield as well. 10 years okay. It's kind of been in a range right here, but if this range low right here starts breaking down, remember, that's signaling that bonds, again, the bigger market is showing you that, hey, we don't buy this bullshit rally in the equity markets. So bonds are bigger than equities, and bonds always are the signal of truth. The Forex markets are even bigger, and they're the signal of the freaking universe, okay? You do not make a move in markets without the FX markets or bond markets first giving it their blessing and saying that, hey, I believe in this move, or, we don't really buy it, that kind of thing. All right. And the bond markets have already been telling you for a while that, hey, we're chopping around here because something ain't right. Okay. It doesn't matter that the equity markets are going up. That is a fool's game right now because there's so much liquidity into the market. It doesn't matter. Okay. But for the most part, bond markets and FX markets are showing you that we're not buying this rally in the S&P 500, in the equity markets. So it's possible that we might get another leg down, whether it's to the same levels that Austin was talking about, 2,700 level, which is that 15 and 20% pullback, or maybe towards that, low that we put in March right here. I really don't know. But what I do know is the market is overextended. People are greedy. They're not taking money off the table, and they're going to get torched sooner or later. You don't need to worry about the small little percentage wins here and there and everybody complaining to you that, well, stocks can only go up or altcoins can only go up. Most people don't make money in the market for a reason. That's because they don't know when to quit. It's the same gambling addiction we all have, right? Once you start getting hot and you feel yourself, well, you double down. You put down more money. Once you lose a little bit of money, well, you don't want to quit because you think that, wait a second, I was up 100 grand, I lost 25. Let me see if I can get back to up to 100 grand again. And then you lose 25 more. Now you're down 50%. Now you use more leverage or play riskier games, and then you lose more money. Before you know it, you pretty much lost everything that you had, right? So these are the games that you do not want to play, whether it's the stock market, whether it's crypto or altcoins. I'm glad everyone is doing great in the alt space. I highly urge you guys to keep taking your profit. I know everyone is, especially I know people like Elizabeth or Siphon. All these guys are great to listen to because I know that people can trust them that they are taking money off the table. but please do not listen to people on Twitter telling you that buy Doge now or buy Link because it's going to $10, because they're freaking idiots anyway. They're going to lose everything. Make sure you guys pay attention to people in here because they know what they're doing. Okay? I trust our community. I love our community, and I know that we have the best people in here who are not going to lead you down the wrong path. All right? That's it, guys. Thank you so much for watching. I hope this was an informative analysis. Y'all take care. Have a great rest of your evening. Cheers.